Hello, viewers. You are welcome again to uh, this episode. I bet you this episode, after watching this episode, I know you're gonna be profitable in your trading journey. I don't want to know, maybe you are a seasoned trader or a professional trader or somebody who is just starting up. All right, before we begin, my name is Sunday. You are welcome to Against FX. If you have not subscribed to my channel, please do subscribe to my channel at Against FX. All right, subscribe to my YouTube. Then just do this. Go to our website againstfx.com. Join us so that we can train you where you're having issues, difficulties. It's a normal thing when you are venturing into uh, a new skill. All right, when you are trying to acquire a new skill, it's always like that. So you need somebody to mentor you. All right, you need somebody to mentor you. All right, so you just go to againstfs.com and inbox us, or you join our Telegram. Also, you can join our current Telegram. I beg your pardon. Also, you can join our Telegram. All right, you see the link below. All right, my YouTube, you see the link below. You join our Telegram. All right, so if you yearly mentorship, this is the price. The lifetime mentorship, that is, you'll be trading with us every time. Any signals, anything, any trade that we take, you will just replicate it effortlessly. All right, that means we'll be doing the technical analysis and everything. Then we'll tell you, okay, we are on a buy, so you take a buy. All right, so it's like that. Or we are on a sell, you take a sell. You just be replicating what we are doing. So that is just it. So, without wasting much time, today's topic, like I said, is going to be mind blowing. All right, you must have heard about imbalance. You must have heard about order blocks. You must have also heard about different time frame. All right, so I'm here to dissect some things so that you can bring everything together and know how to apply them in your trading journey. All right. The topic that I want to touch on today is imbalance plus higher time frame order block that will give you a plus setup. Now, let me list it here so that as you are seeing it, you understand what I am talking about. All right, imbalance, all right, plus the HTF. Anyway, you see a HTF, you know, is we are talking about higher time frame. Imbalance, higher time frame, one moment. Imbalance, higher time frame, that is HTF, order block we give you A plus, we give you A plus, sorry, we give you A plus setup. Yeah. So, what are we saying here? Technically, when you identify another block, not just on any time frame, but the other block must be on the higher time frame. What do we mean by higher time frame? A higher time frame, any time frame that is above 4 hours, from 4 hours. As a matter of fact, 4 hours and daily. That is, I'm not talking about people who are trading other blocks on 15 minutes, 5 minutes. I don't have any problem with them. But as a matter of fact, other blocks, the real other blocks that really holds ground, and when price gets to that level, it does not break, is another block that you can find on a higher time frame. 4 hours and daily time frame. We have the 4 hours time frame and we have the daily time frame. So what am I talking about? I'm talking about a I'm talking about a setup. I'm just talking about this one, the HTF on H4 and D1. All right, H4 and D1. The higher time frame, the H4 and the higher time frame H4 and the D1. So now, when you use the word imbalance, all right, imbalance simply means that a price leaving a certain level with a very high volume, with a speed, instead of price to be moving in sequence, as in just move bit by bit, what happens is that the price will leave a particular level in aggressive manner. All right, a price leaving a level in aggressive manner. All right, and once a price leaves a level in aggressive manner, what happens? It leaves an imbalance there. All right, that means price will not be equal, price will not be balanced. All right, so let me quickly give you example of imbalance so that you will understand what we are talking about. If you go to um, the daily time frame, you discover that there's a big candle, this very big candle here. Price took off from here, all right? Price took off from here. Look at where price got to. Big candle. You see the gap? All right, you see the gap? This is what we call imbalance. Price is not supposed to just create a very big candle like this without putting another one in between. It's supposed to move a little, close, move another, print, start printing another one like that. Or even if it's big, when it starts, when the next bar market starts, it's supposed to come and cover it up. But it did not cover it up, it started going up again. Even though this very one, you can see this bearish candle, this white candle, when as at the time this one finished printing, the bearish candle opens, you understand, it came and closed up this gap before it started pushing up. You see, this other one started pushing up again. Do you understand? Now, when you look at this one, when it was retracing, the retracement is to close. The aim of retracement is to close the gap, the imbalance. All right, like this one, we did not see anything like that. All right, and I will tell you what now happened. At the end of the day, at the end of the day, price on a higher time frame, the daily time frame, he came back, all right, push to the downside to close up this gap. But we have one candle, two, three, four, five, six. At that point, before this one started printing, there was still imbalance left. All right. This particular one, this is what we call imbalance. All right. This very place here is what we call imbalance because there's a gap. The price needs to come and close up the body. All right. You see on the higher time frame, this is where you now know the one that is valid and the one that is not valid. Then if you look at this one too, this candle now move a big candle. The next candle, it did not close up the gap. Why? Let me show you. You discover that there is still a gap between this high and this high of this candle. This candle here and this candle, there is a gap. Price needs to close up this gap. In forex trading, this is what we call imbalance. All right. Now, what happened? Price now came and closed up the imbalance. You see, it has closed up the imbalance, and price is here before market closed yesterday here, being on the 6th around 11. Market now closed. All right. So what do you think it will happen when market opens on the 8th around in the 11? When price opens, when market opens, what do you think it will happen? Because I, as a professional trader, I can see that there is price now has started pushing, rejecting from here, meaning that buyers are stepping in. Even before market close, there is a sign already that buyers are in the market. All right. Why? Because of this demand zone. Because of this demand zone. All right. So before you can say, okay, you want to trade another block, move to the higher time frame, go and check because this one here, if you scale down to if you scale down to the 4 hours, the 4 hour, you see, if you scale down to the 4 hour, you will discover that price, this very one here, you'll be looking at, okay, this is the only other block. If you let's say if you scale even further, let's say in 4 hours, this is the 4 hours, you say, okay, this is the other block, right? This last candle here from the top and the downside, Abi. Then you will now be thinking that this pullback did not close up the imbalance. But as a matter of fact, it has already closed it up because if you scale to the upside, if you scale uh, to the daily time frame, you discover that this is the top of, look at it, this is the top of this other block here, and price has already communicated with this. So it's as good as it has done its job by closing up this level. Let me show you so that you understand. You see, this is the high and this is the low of this candle that is at the back of this big candle. You can see, and look at this candle here. You see, it came to close it up. It's already inside. It has what? Interacted with this other block. And that was why it dished out a buy. All right, that was why it dished out a buy. That is why we say, come to us, we will teach you so that you'll be able to refine your other block. All right, you'll be able to refine your other block. You don't just trade anyhow other block. All right, because if you say you want to wait for this one and you wait until the kingdom come, because price has already come on the higher time frame, price has already interacted with this other block, and he has already dished out a buy. All right, he has done his job, And now all you need to do is what? Mark this place is no longer valid. This very place is no longer valid because it has done its job. It's no longer valid. We have marked the top and the bottom. If you scale to 4 hours, I don't want to waste my time going to 15 minutes or thereabout. Look at it. All this place is what? Is a demand zone. Price came and it has touched, it has communicated to this demand zone. That was why it dish out a buy. All right. Stephanie, everything here, he has done his job. He has closed up the demands, the imbalance, and he has done his job. He's gone. All right. So this very one here, like I said, is no longer valid. All right. If you're looking for another block to trade, it shouldn't be this one because price has done its job by closing this place up. And what happened? Price action dish out a buy. All right. So this one is out of it. The next order block that is valid now, currently, is where price is trading at now. Price is here, all right, and it has already tapped in. If you go to the higher time frame again, that is for daily, you discover that price action is in here. All right. So what we should be looking at, I've already done my technical analysis for the week that is coming, but I'll just keep it like that. Now, for the week ahead, I already know what will happen. So, what are we trying to say? Before you can trade imbalance, number one, before you can trade another block, number one, make sure there is an imbalance, all right? Not just imbalance. Make sure that other block is found on a higher time frame, 4 hours daily. I'm not against people who are trading 1 hour, 15 minutes, 5 minutes, even 1 minute. I'm not against it. But what good is it when you make money and now give it back to the market? No, it does not work that way. If you want to remain consistent and profitable, you move to the higher time frame. Let me tell you guys one secret. On a higher time frame, you don't see so many setup. You can stay a day, two, without any setup. All right, but on a long time frame, you see different setup, fake setup, real setup. That is the problem. People don't have the patience to wait for a setup on a higher time frame. That's why you see them running away from a higher time frame. No, no, the higher time frame, the setup is always a quality setup. Once there is a setup on a higher time frame, that setup will just be moving. Once you notice and be able to identify a setup, once you enter, you just leave. It has a destination. It will move from A and it will get to B before anything happens. And you will not you trade, you'll be at peace when you are trading on a higher time frame. I mean, at least take your trade on a 4 hours. All right, 4 hour time frame, take your trade there. So guys, it's very, very important. The topic is imbalance. You group it with, we trade your imbalance on a higher time frame with other block. That is A plus setup. I tell you, if you want to take your trade, that is a higher time frame, 4 hours. Wait for a setup, even if it will take you 1 day, 2 days, or 3 days to wait for a setup. But be rest assured that once the setup happens, you just make a good profit from it. But it does not come every day. So, guys, now that you know how to trade your imbalance, grouping it with your order block while you take your trade on a higher time frame. I wish you good luck. Share this video, subscribe to my channel, remain blessed. God bless you guys.